morning again, everybody. Great to see you all back here this morning. Welcome to our session in conversation with Westpac CEO Peter King and CEO of the Bank of Sydney, Melos Sulicich. We did a bit of this yesterday morning, as you know, with Marnie and Andrew Irvine, and I think you'll get some different perspectives because they're different banks. So I'm going to open by asking both of you quite a general question. How do you see economic conditions at the moment? We all saw the monthly CPI data yesterday, and there's a lot of commentary about it this morning. 13 interest rate rises since April 2022. It's fair to say that inflation is persistent. When you look across your book, we know that from the Bank On It report, arrears are low, but what are you seeing? How are your customers faring, and where do you see the pain, and where do you see people are doing actually quite well?
Well, welcome and good morning. If I look at some of the big markets, if we look at consumer and business sentiment, I think that is very insightful into what's happening in the economy. So business sentiment has held up pretty well. Consumer sentiment is very low, and that's probably the conundrum in the economy at the moment, where those tend to come together over time. We hope that consumer sentiment will lift as we enter into a rate cutting cycle at some point in the future. But I think that it's also reflected then in our demand. So if we look at both housing and business lending, which are the major lending portfolios, we see really good demand for our products and lending. So we really got an economy that's being squeezed by those interest rate rises. The RBA describes it as contractionary stance. It probably is, but it's a slow contractionary process, and we're just seeing that it is hard to get this final bit of inflation out of the system. So whether that means we'll get a rate increase or whether it just means we live with interest rates at the level they're at, well, time will tell. But the other piece will be the labour market, of course, and if we do see a little bit of weakness in the labour market, maybe we'll get a different outcome. So we sort of see from a demand side, good demand. If I then talk about the consumer, spending's gradually coming down in nominal terms, and that's really the impact of inflation, interest rates, and higher taxes. You know, the bracket creep in the tax system has been a big drag on the consumer. So we see that, and then if we turn to credit quality, in a historical perspective, our books are in very good shape. So we have seen more stress, but at the macro, credit quality is pretty good, and that's why we are tending to focus on those that need help, and the focus on hardship arrangements is a big focus. To dimension that for you, we've got 12 million customers, 19,000 of them have hardship arrangements at the moment. So that hopefully gives you a picture of we're sort of on that narrow path that the Reserve Bank talks about, that we're maintaining the employment gains and slowing the economy, but the path from here is a little bit uncertain because of the sticky inflation.
Melos? Thanks very much, Anna. Just before I start, thank you to you and your team for the conference and putting on this conference for the last 2 days. It's been absolutely fantastic. I think the content's second to none, so congratulations to you and well done to your whole team.
You're part of the content, Melos, so that's good.
I'm still going. Okay, so what are we seeing in our book now? We're a lot smaller bank. It's nice to be called a mid-tier bank when you're the size of the Bank of Sydney, but like all of the stats we've seen, our book's very good, in very good condition. Arrears are very low. I can count the number of hardships we've got in our bank on less than two hands, probably one hand. What we are seeing though is a number of calls into the hardship line starting to increase, albeit off a very small base, just more and more coming in. The concern that I've got going forward, and I think, as Pete said, it's either higher for longer or potentially another rate increase, is that the people that are doing it tough at the moment are going to find it even tougher. That's going to cause some real problem. The people, if we have another rate increase, the people who are doing it well at the moment are actually going to do even better because they're the self-funded retirees with money in term deposits and a lot, which is likely to go up, and so they're going to have even more money to spend. So potentially that puts even more pressure on inflation as well. It's sort of quite an unusual dynamic I think we've got at the moment, as the Reserve Bank Governor has sort of alluded to a number of times. But the area of the economy that I think I'm most concerned about is small, medium enterprises. And what we're seeing there is you've got small businesses who are having to pass on higher wage costs to their staff. They're getting higher input costs coming in. They've passed those costs on as best they can to their customers, but they're now seeing customers pushing back against those cost increases and losing business as a result of that. And that's starting to cause, I think, in the SME sector, quite some pain, and we're starting to see that, I think, come through in the economy and in our books, and I think the larger banks in particular will start to see some of that come through. If we do have more rate rises, that's going to cause that sector, and that's the lifeblood of the Australian economy. We're going to see that sector in even more trouble, and that might cause some other more rocky issues for the economy going forward, I think so. I think that's what I'm seeing at the moment.
We've just had a session on the data in the Bank On It report, and I think there is a lot of interest in just how how customers are behaving. I do want to move to the sort of future of banking, or how you see the future of your banks. But just before I do, Petey, Westpac has, I think, one of the biggest branch networks in Australia. One of the things in the report tells us, which I found very interesting, some of the differences between customers depending on their age or where they live. It's traditionally been quite a gap between the use of cash, for example, by older Australians and younger Australians, use of cash by whether you live in regional Australia or cities. Those gaps on all of those indicators are closing quite quickly. And in that context, with your branch network, the people who are using your branches regularly, what are they using them for? What are the things that they still value about going into over-the-counter services?
So one of the good ways to get a line of sight on what's happening is we do focus groups in the branches, and I'll attend a couple each year. And I'd say it's preference. It's not so much, we focus a lot on age and as an indicator of preference, but it's really preference. So we'll have some people that say, I don't want the government to know what I'm doing, I want cash. Now that might be, I'm managing my tax affairs, I just don't want to be tracked. We'll have customers who say they don't want their partner to know what they're doing. So, blokes want to go down to the pub on a Friday night, they need a bit of cash because they don't want to be tracked. And maybe there's some other examples like that. There's illegal activity in cash. They don't tend to turn up to the focus groups, but there's illegal activity. But actually, I've had situations where I've had a 70-year-old customer explaining to another 70-year-old customer the digital channel and why they should get on it in these customer groups. So I think we've just got to transition people as we go through. But branches, I think, will be critical. For us, they're a brand. They're as much they're the face of Westpac, so they play an important role in representing the company. In big decisions, people like to talk to people, and hopefully that's growing a business. Hopefully that's buying a house. But often it's when things go wrong as well. So they play an important role in the trust of the organisation. I do see a bigger role for video, so we can see virtual branches playing a big role in the future. So I think bank from your home. If we're in a world where a lot of the transactions are digital, you're really looking to speak to someone for insight. So we think video from home plays a bigger role. We think video within the app is very safe, so that'll play a bigger role. So I think the branches will be there. They're part of our offering. They're part of our brand. They're important for resilience. You think about things, natural disasters. Often when that happens, you get a period where there's no telecommunications and electricity, and you need to go back to the old analogue cash. if you've got a safe up there in a branch with cash, they provide that type of service into the economy as well. So I still think we'll have branches. I think the nature of them will change over time to go away from transactions, and we're seeing that in that report, and it'll be much more about service advice and helping people with what they want to achieve in life.
Melos, Bank of Sydney doesn't have one of Australia's largest branch networks, but I'm interested, are you seeing customers using video channels, for example? Are you writing mortgages on Zoom? How are you seeing data and technology change, and where do you think that might be in 5 or 10 years' time?
Yeah, we have a branch network, and we always have had a branch network. I think one of the biggest differences between small banks and large banks is that I don't have to have a focus group to go and find out what my customers are doing. I just go and talk to them, right? There's fewer of them. A lot of them have got my mobile phone number, and they don't abuse it. They don't abuse that. They ring me if they need to. And from whether you're a mortgage broker doing a mortgage or a branch-based home finance manager, people are using technology. They use their technology and talk to people via Zoom or Teams or whatever it is they use. They'll continue to do that. There'll be more and more of that. But we have a large cohort of our customers that just like going into a branch for all of the reasons that Pete mentioned. They get safety and security out of going to a branch. They feel better about talking to a person. They can go and do that in a branch. We've got the average age of our customers is older than many other banks. They like to come into the branch because older people tend to like doing that. We've got a strong Greek heritage. If you're a 70-year-old person who was born in Greece who came out to Australia and has a bank account with us, you go into a branch and you talk Greek to the tellers, or in some parts of Sydney, Arabic to the tellers, because we've got a strong Lebanese and Arabic background as well. People like doing that. They get comfort out of doing that. It's partly social, but I think less social than some people think about. But people want to bank with small banks as well as they want to bank with large banks as well. They want to eyeball people. They get comfort out of eyeballing people. There's a role for branches. Clearly, I see a role for branches. We've got no intention of changing the shape of our branch network, because those customers want to come in, and whilst the dynamic of that customer base is changing, we're even seeing younger customers who do want to come into a branch, who do want to sit down with a home finance manager or a business banker, eyeball them across the table, understand their finances better and what they can and can't do. And you really get much more of a richness out of doing that in person than you do via Zoom or any other or over the telephone. So there's a ongoing role, whether you're a large branch or a small branch. Now there's some banks who don't have that in their armoury. They don't want to have branch networks, and that's fine, because there's a customer set that also doesn't need to do that. I mean, when I look at the SME segment, there's a part of the SME segment that just want the lowest price of a loan they can possibly get. There's a large part of the SME segment that said, I don't care how I do it, I just want to do it online. But there's about 30% of SMEs who want to go in and talk to someone. And they either want to go into a branch and talk to someone, or they want someone to come and talk to them. And so that's going to continue. Those people want the education that a banker can give them, and they need the education that a banker can give them. So it's a long-term role for the branch network, but I think as a number of people have said over the last while, it's going to change and evolve. The world's changing. That will change with it, but there's a need for it.
Peter, you've only recently put down the cap of being the chair of the ABA, and during the 2 years that you were chair, I think it's fair to say that scams was on top of the list for most of that time. Talk us through a little bit about how Westpac, because I'm sure a lot of the discussions that you're having in your bank, and Melos is same, they're the same conversations that are happening around the executive tables and the, the team tables in all of our banks. What are the things, how are you thinking about scams, and how do you see that the next phase in the fight against scams?
Well, if we start with what are we trying to achieve, we want Australia to be a hard place for scammers. And I think that's the anchoring principle that we as Westpac have, but the industry needs to have. And I found the IJM presentation yesterday very powerful, actually, for a reason why we got to stop it, not move it. There's the victim, the consumer in Australia that's impacted, but you've also got the illegal activity, and the build out of that scam centre in Southeast Asia that was shown yesterday, and the fact that there's forced labour in it was just shocking. And so I think the way we need to approach this and get after it is to stop it. And so that's, I think, a very important thing, because I think we focus on some aspects of the impact, but it's quite broad. So what have we done? We work with Optus to put all our phone numbers, 94,000 of them, into a do not call register. And so overnight we were able to block scam calls that were appearing as Westpac. That's a couple of years old now, but that was a big move for us. If you look at the type of scams, the top three are investments, email compromise, and romance are still the top three. The biggest change that we made was stopping transfers to digital currency exchanges. So that by itself has pulled down the biggest losses in investment scams. There's a really good chart at the back page in the pack on your desk, and you can see we've changed the trajectory of scams. And that was, we were the first bank to do that. That was a tough decision internally, but I look back and go, it was a good decision, because it has really changed it. And we heard actually the IGM fellow yesterday said that digital currencies are used to move money out of the domestic system into the international system pretty quickly. So we're sort of cutting off that angle. That's important. If I look forward, the industry's committed to name check. We already have that in using our database of payments that have been made over the last a long period of time. But there's a bit of a change in thinking. We used to use the data and algorithms to work out what we thought were dodgy payments and just stop them. We've thought about it now about how do we expose the thinking in the app. So if you create a new payee now, we'll go and check it against our database and give you a green, amber or red rating so that you can start to think about it. Same with payments, where we're now putting back to the customer, we don't think this is real in the digital layer. So rather than just blocking it, we're using the technology to push it back so consumers can make better decisions. We'll also ask them questions now. So the algorithm will pump out, did this question or did this request for payment come through WhatsApp? And that's a classic indicator of scams. And then we'll drop down into further questions. And if it doesn't pass, then we ask customers to call us. So, but the thinking there is actually, rather than us having all the smarts in the background, we're pushing it into the app, and we believe over time we'll have a better educated customer base as we start to help them understand what they're looking for, and we'll also have lower scams. So there've been a couple of big things for us.
I think you actually did that yesterday.
When Adam put up his text, I actually put it straight through the system, and good news, Adam, it didn't work. It said, don't pay it.
So if Adam had proceeded with the money that his alleged daughter was asking for because she'd put her phone down the toilet, yes, Peter put the BSB straight in and it came up bright red. So that's encouraging. If you had believed her, it wouldn't have worked.
Yeah, but I think we've got to stop them. It's not a case of who moves them. And then I think we should just talk about the ecosystem. We need to get the tech system to be authenticated. At the moment, it's messaging and it's not authenticated, so I think the government's moving on that in terms of the SMS register. That's critical for us. The telcos are obviously got a role to play. Do not call registers are pretty good. And then we've got social media. We need social media to take this seriously and take action to pull down these investment offers, often what they are. But we need action in social media to be part of that ecosystem to pull this down. If you look at it, so I think educating customers, doing more with social media, hardening up the telecommunication system, and then the banks doing what they can to stop the movement of money, we can really make Australia a hard place for scammers. And if we do that, they'll go and look somewhere else. That's where we've got to get to.
Melos, what are you seeing? Scammers don't distinguish between the size of banks. They don't distinguish between the age of customers. As we heard many times, it's now an industrialised sort of business, and they'll throw out 500,000 messages and hope that somebody gets on the hook. How do you see that in your bank, and how do you think about it around your executive table?
Yeah, I actually think they do discriminate against the age of customers. They look for older customers because they tend to be less digitally savvy and more prone to picking up things, particularly I'll call them more vulnerable older customers. And so I agree with all the stuff that Pete said. The only sort of two things I would sort of either add or amplify is training, staff training, customer training, all the stuff that we're all doing internally to help staff identify when scam stuff's coming through and talk to customers about it as well. It's a scourge on our society, the whole scamming thing. I heard the term for the first time yesterday, social engineering. And I've seen that. I've listened to the calls where you have a customer, you've called a customer or sent a message to a customer saying, we're not going to make this payment because we think you're being scammed. And the customer gets on the phone, agitated, saying to the operator, I want to make this payment. This is my money. You can't decide whether I make this payment or not. Quite agitated. And then if you let the payment go through, the following week or month they find out they've been scammed, they come back to you and say, you shouldn't have made the payment, you should have protected me. So it's very, very difficult. The social engineering thing is the way these scammers can get into the heads of vulnerable people is unbelievable, and it's the older ones that they really get into, or tends to be older ones they tend to get into the head of, or parents with young kids who throw phones down toilets. And the other thing is I think we need to be, the country needs to be better at managing social media, because that's where most of it emanates from. It comes from, I've still been meaning to apply for that investment that Dominic Stevens keeps advocating on Facebook. It's still coming up months and months and months and months later. How that happens, I don't know. How we allow that to happen, I don't know. So obviously they're getting at people for those sorts of things. And I think if you look back a number of years ago, I'll sort of divert a little bit here. I recall when the AML requirements first came in, there was a lot of complaints within banks about why do we have to do this? It's a big investment to get AML done, yada, yada, yada. We now just look at it as a cost of doing business, and it's the right thing to do. The social media companies, I think, have to accept that they've got to do things within their own ecosystem to stop scammers coming into their system and turn them off more quickly. They haven't yet accepted that. And I think the government's got a role in forcing them to accept it, and ultimately they'll come to the conclusion that it's just a cost of doing business.
Peter, we've all seen, I think, pretty horrific images of AI being used to, when I say horrific, the impersonations are getting better and better and better. So we know that AI can be used, but they're in the hands of criminals. AI can be a very, very dangerous tool. How do you think AI on the upside can help banks and other players in the ecosystem potentially, as a weapon against scammers?
Well, I think AI is used very broadly. So we've been using more traditional machine learning and other aspects of AI for a long time, and that's what sits behind our scams capabilities. So I think there's it's definitely helping us, because the size of transactions that we're dealing with, often you're trying to find a needle in a haystack, and people can't do that. You need the AI. The step change is Gen AI is firstly changing the interface, so it's natural language, which means you can basically speak to it. So if you talk to some in the technology sphere, they say you won't need as many programmers as what you have today, because the technology will do the programming. Now, I think we're a long way away from that in terms of years, but that's the first big change. It's natural language, so you just speak to it and it does it. And if you haven't got I'm not trying to plug ChatGPT, but get on it, have a play with it. Use, if you want to subscribe. It's amazing what it can do and how it will change work in time. So that's the first big change, is the interface. The second big change is graphic. So we take a mortgage application. We've got experiments running where you can actually look at the mortgage application using Gen AI to work out what needs to be looked at, because it doesn't match your policy. So rather than the human eye doing it, you actually use the Gen AI to do it. So it's going to change the way we work. So I think if we come back to scams, certainly there's ways, and I'm sort of thinking further out, that we can put the tools in the customer's hands to help them make better decisions. I think it'll help us in our processing. But the biggest thing we're going to have to watch is how do we watermark an image as being digitally created, or AI created, or voice. And so we are working with partners, our technology partners, on technology that'll help us to work out that it's a digitally created voice, as an example. So there are technologies that are available that we will start to deploy internally, so we can pick up whether these voices are real, because we're going to have to go both ways. It'll be used by the scammers to create scams, but then we're going to have to deploy technology that says this is a digitally created image or a digitally created voice. And the good news is the big technology companies in the world are putting a lot of money into these type of protections, and we will have to start to absorb them into our ecosystems over time. So it's just that next generation of technology, and you just got to keep up with the scammers.
Melos, you heard me asking Joe Longo this morning about how ASIC thinks about proportionality in the context of the review that the Treasurer has asked the Council of Financial Regulators to undertake. I don't think the Treasurer would have asked the Council to do that if he didn't have some genuine concerns about the pressures on the mid-tier and smaller bank sector in Australia. What do you see? Well, you've had a lot of experience in a smaller bank. Tell us a little bit about how you think about those pressures, and particularly in the context of, if the current settings are maintained, what do you think is the future of mid-tier and small banking, given the technology challenge of the next 10 years?
That's a really big and complex question to answer, so I'll try and be coherent. And I'll start by saying that I'm an advocate for smaller banks, right? I think I'm an advocate for bigger banks, and we've heard today, our banks are the best, amongst the best capitalised in the world, so we've got the safest banking system in the world, and that's fabulous. Smaller banks play a different role in the banking ecosystem and in society to the larger banks. There are people who want to deal with a smaller bank who specifically don't want to deal with a larger bank for whatever reason. It doesn't matter. They've got their own multitude of reasons, and to not have a smaller bank competitive environment in the country, I think would be a real shame for us, right? So I'm an advocate for smaller banks. Some of the smaller banks in the past have been amongst the most creative and innovative in the country. The first internet bank in Australia was done by a smaller bank. Now, you could argue that's just a matter of time because the larger banks were going to come in and follow that, and so that's true. But the offset account was created by one of the smaller banks. It's pretty well unique to Australia. Had it not been created by a smaller bank, it wouldn't be here. It's now the mainstay of our mortgage lending products of every bank in the country. So I'm a strong believer that we need smaller banks. If you look at the competitive environment in the banking industry at the moment, the big banks are barely reaching their cost of capital with all of the scale advantages they get. And as Pete said somewhere a couple of weeks ago, it's a scale game. If they can't reach their cost of capital and the cost pressures and the inequity of the way the cost pressures fall on smaller banks, it means the smaller banks can't reach their cost of capital as well. If you can't reach your cost of capital, you're not going to get investment. And so we have to find a way to allow smaller banks in Australia to reach their cost of capital. And that comes down to what's your capital base and how do you manage that? What's your cost of capital? What's your cost of funding? Because that's very different in a smaller bank to is in a larger bank. And how do you manage your cost base as well? So I think it's a very difficult question to answer. I note that perhaps John Lonsdale was a little bit defensive yesterday in some of the stuff. I don't think it's an APRA issue. I think it's much broader than an APRA issue. So I'm really pleased that it's been given to the Council of Financial Regulators to have a look at, rather than just one of the regulators or the prime bank regulator. And I think it's a good start to a conversation of how do we change the landscape somewhat in the country to allow the smaller banks to thrive without making the system unstable. John spoke about, I don't want to change the settings because I don't want the system to be unstable. I don't think anyone's calling for the settings to be changed to make it unstable. But as a smaller bank, for you to remain in business, to achieve your cost of capital, to give a return to your shareholders, whether you're a mutual or a listed or you're foreign owned, you need to be able to generate a return because you've got to invest in these things. And the investment profile of any bank, whether you're large or small, is big compared to your size. And you look at the investment that's going to be required in the future for AI, we're just talking about that. That's not small. To change the whole profile of the business is not small. So we have to, from a regulatory point of view, look at what things can be done to enable that competitive environment to be equal and fair for everyone to earn a decent return on their capital investment and for the risk they put into the business, and to look after the customers and the customer segments that want to be looked after by different profiles of banks. Hopefully that was somewhat coherent.
That was a very coherent answer to a complex question. Well done. Peter, I'm going to wrap up with a question to you. As I said, you retired as the chair of the ABA in December last year. Andrew's 3 months into a 2-year term because he swapped with the Ross. What do you think will be the biggest challenges for the sector over that period, over the next 12 to 18 months?
I think it starts, if I think about what do we need to maintain, it's the support and trust of the community. So if I think back, obviously we had a pretty hard time during the reviews, the Royal Commissions and whatnot. We have, I think, come together as an industry well to support the country during COVID, and we rebuilt trust to a level that hasn't been for a while. So for me, that's the first thing. How do we maintain trust? How do we help the economy navigate this period ahead? And particularly, how do we help those who need help? That the hardship is the best example. So that's the first thing, I think. There's a lot of transitions going on in the country. We talk about cash a bit. We've talked about digital. We've talked about energy. Or we haven't talked about energy, but the energy grid and its transition's pretty critical in the next decade. So I think just supporting all those transitions, And then we've got to manage the risks. So the tail risks are a bit bigger than what we've probably had for a little while. Think geopolitics, think cyber, the normal sort of financial risk, capital, liquidity, and credit quality are actually in pretty good shape. So we've got a good period. So I think if we navigate the next year, we help the community through, we maintain trust, we're focused on the customer, and then we maintain strong financial settings just in case there's one of these tail risks that eventuates. That's a good way, I think, to navigate the period ahead.
Okay. Well, can I ask you, ladies and gentlemen, to thank Peter and Melos.
Well done, mate. Good job.